Okay, traders, good morning and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, February 6th. Mike Boutros with you on the wire. Good to be with you guys this morning. Aurelian, Jay, Patrick, Pete, Pooja, got the whole team in today. So, non-farm payrolls on tap tomorrow. You do get also the release of CAD employment. Again, that double whammy employment Friday offering some decent volatility sometimes, specifically on dollar CAD. On the menu for today, we'll hit DXY, Euro, dollar CAD, obviously, sterling at support, Kiwi, crude, gold, a nice rebound off downslope support today. We'll take a look at the abomination, which continued to rip higher here, but looking precarious on the upside, in my opinion, on dollar yen near term. And that's everything that's on my list. I should probably add Aussie on here too. We covered that this week. Any other questions or trade setups, guys? Feel free to throw them on the message board at any time. Pooja, good morning. Holding a small sterling short and still holding that dollar yen long. So we'll hit those pretty early. Dollar yen, here's just really quick. You know the chart on dollar yen. This affirmed slope that we adjusted has the 75% line just higher. Okay, and you're seeing that momentum is kind of dwindling a little bit. So watch that. It's basically 110, Pooja, near term. Could be an exhaustion point, but if this breaks upslope resistance, that accelerated pop should take you towards 150. So this would be the first hurdle, okay, into the US Open. We'll come back to this one in a moment. DXY, here's what we look like. So obviously, we've been talking about this weekly chart for months. Just wanted to highlight that 618, 98.40. Remember the focus all into the start of this week, I told you guys, was 97.87. That was really the level that we were trading against on the downside. Once that gave out, 98.40 is going to be that 618 from the recent drop and those former highs. Okay. Watch this into the close tomorrow. Critical. You got NFPs on tab, nice little event risk. You got some things cleared out of the way, right? As far as market headlines, I guess namely the impeachment, that's sort of shuffled out of the way. Then you have the China trade deal again, which seems to be abating. You saw them slashing those tariffs earlier today. The one caveat being the coronavirus, which is still sort of at the forefront and really has the potential, guys, to roil markets even more. I don't want to get into speculation what could be going on or how it could go. Just know that that's sort of the biggest threat right now to market sentiment. So watch the close. Watch if this trigger gives out. If we do see a topside break above that momentum trigger on a weekly standpoint and the 618 is compromised, meaning we close above that, you're looking for resumption of the broader uptrend in dollar. So could really throw a wrench into the larger sort of pullback idea. Here's what DXY looks like on the daily chart. 98.40 also converges on this near-term slope. Again, this is basic parallel just off the lows, 1, 2. Parallel off that, extended off the high from January. Converges right there in that 618. All right. Again, watch the close here today. Watch the close here today. We're checking the December open, but also aside from this being the December open, guys, on the intraday chart, you see me highlighting 97.30. That's the high day close for the previous month right here. So you had the high day close, 97.27. This is the open, 98.27. And then you have that 618 retracement, 98.40. Big zone. We're trading in there right now. Look how many closes this zone has caught, right? Low close, high close, high close, high close. What are we doing here today? Okay, critical. And it's great that you find yourself coming into these levels right into a major economic data release like non-farm payrolls. Now, to be fair, we always go around the caveat and talk about, well, why this print is important or why this print has the potential to move markets. The bottom line is the Fed's focus, again, I'm going to say this as I said last time, is not really fixated right now on the employment or the labor markets, right? For all intents and purposes, markets are at the natural rate of unemployment, okay? Again, we're looking for a hold tomorrow at 3.5%. I mean, give me a break. The one thing that you want to note is that yesterday's ADP number really crushed it. I mean, it came in at like what, 200 and some thousand versus a 164 expectation. So again, not necessarily foreshadowing NFPs, but typically they do tend to move together. ADP is notorious for missing larger swings um, in the broader NFP report, which is more encompassing, right, versus the private payroll. But if the correlation holds, we should be looking for a decent print tomorrow, if not stronger than expected. All right, so what does that mean for the dollar? Well, we've already seen a pretty strong rally of what 1% right off the lows. This is the start of the month. This is just this week, guys. So the potential, if it's a print at expectations or better, is for exhaustion on a push higher. 98.40, the upper parallel. You start to look for this thing to teeter out. The swing highs that you made back here in November come in just higher at 98.50. Okay. If it turns out to be weaker than expected, the washout is what I'm really interested to sort of examine. Even if we were to get a weaker print, guys, the broader labor market sort of view, like I said, is not really in dire situation. It's not really what the Fed is focused on. Remember, the Fed's dual mandate is fostering maximum employment, which is basically what we're going to look at tomorrow, and price stability, i.e. inflation. So the employment sector, that's sort of all right. We got that in the bag. They're all focused on inflation. So unless we get a major miss tomorrow, don't expect that to actually move the market. It's more so if we get a strong print, how high that takes the dollar, and is that a fade opportunity? So that's my idea on the DXY. Here's what it looks like on the intraday chart, and here's what it looked like last night. That upper parallel seems to be doing the trick for now. Okay, just higher, 98.40. That's the level. We'd like to trade the exhaustion if you do get the push higher, but not really interested in shifting anything on the long side from here, guys. So just take that into account. If you're not already holding a long, it's a chase any way you look at it. Any way you look at it. So caution. I don't want to get too excited and start to fade this thing as it's ripping higher. So the indicators are just not there yet. You haven't gotten any triggers yet to put you on the short side. But at the same respect, I'm not going to attempt any new long positioning. If you're holding longs, you want to bring that limit or stop up. If you're holding sub 97.97, that Friday high from last week, that's sort of where I'd want to see this thing hold. If you get to 98.40, I would be doing something. Clean up a little bit. Okay, above 98.40, like I said, you have this slope right here, okay, which comes in around 98.70s. And if you look in price based on time, you're gonna have that other parallel, that sliding parallel that caught the highs back in January and then into the close of January again, which converges somewhere around that same region. So just keep that in mind for the broader picture here. But end of day, 98.40 is going to be the level that we're stoking out into the close of the week. Questions on DXY? Dollar yen, a false break above 110 with divergence on an hourly daily would be nice before NFPs, and a retest after the print to short would be a dream come true. Be careful with the dream come true on the abomination, Pooch. I don't got to tell you that, right? But I would tend to agree. Here's dollar yen. Let's go back to it. We'll do that number two. Dollar yen. Okay. So here it is. Yeah. Okay. So this is dollar yen on the weekly chart. I want to go through all the majors today, obviously with major event risk tomorrow, something to take note of. Here's the dollar yen weekly we've been following. This is a pitchfork that extends from the highs that we made in 2015. Okay, multi-year. Yeah, it got a little bit hairy over here in the 2018 rally, but still on a closed basis, rock solid. All right, here's where we're trading now. Okay, here's where we're trading now. My stop is 109.78. Okay, look, before we get into that, let me just focus a little bit more on this weekly chart. The pivot, okay, into the close of last year, before we even opened 2020, was this zone, 109.36 into 109.68. That's last year's open. It's the 618 of last year's range and a huge pivot in price, right? Look at my crosshair all the way to the left. We pushed through it, it failed right at 110.30s or so, just ahead of that, pulled back, and we've been straddling this huge pivot zone for the last like 3 weeks. Just higher is that slope, right? And this is what has me looking for that exhaustion trade, Pooja. So as far as the dollar yen long, you have a stop at 109.78. It's a pretty tight stop. What do you have at 109? Well, let me jump into the closer charts, and then I'll come right back to this. So on the weekly standpoint, guys, into tomorrow's close, watch how we react along that slope. Again, we've had many intraday thrusts and intra-week thrusts, no weekly closes, right? Maybe you can discount that one on November in 2018, but it was like pips off. So really respect and watch that slope and how we close this week on the upside. If we do breach that, 110, 70, 111, those are just like near-term targets. You still have that uncovered close from back in 2019 at 111.05. So there's a lot of room to the upside if this breaks. As it stands right now into the close of the week, watch for a reaction there. Watch for reaction there. I'll also note one thing on this dollar yen chart. Note that since the high we made in late 2018, momentum has not been able to breach 60, okay, on a weekly standpoint. And in fact, despite all those failed attempts to breach 60 in momentum, we've had multiple breaks and dips below 40. That suggests that the broader downtrend remains intact. My point being, the no, right? What's going to be the tell is if momentum breaks 60 on a weekly close basis and price is able to close and mount this slope, then you're talking that there's a behavioral change in the momentum profile, and that would suggest that the swing is starting to come in more favor of the bulls. That being said, resistance is resistance. Momentum still sub 60. Watch the close of the week. Here's what dollar yen looks like on the daily. Now, again, this slope has been pretty decent, okay? Here's the parallel that I'm looking at right now. Here's the pivot above 109.50, 109.67. That's the 618, the near-term drop, but again, last year's open, same zone. And here's that parallel. Look for support here at the median line, a topside breach. You're basically looking for that thrust into 110.50. Okay, here's the intraday. And here's our last update on dollar yen. All right, so we were coming into the zone at 109.53, 109.68. Was hoping to get a little bit more of a pullback, a really nice breach of that descending channel. You'd look for an entry there. The pullback didn't quite get deep enough, at least to tempt me to get back into this. So here's the thrust. You're kind of holding a little bit of a pivot there, push higher. There's the parallel, right? So immediate support, Pooja, I have at like 109.68. I was going to ask you, what do you have at 109.78? That you're looking at? Are you just looking at a swing low? Today's London session low. I can read your mind. Kind of wave 4 low. Okay, yeah, that makes sense. I would just be watching this pivot at the yearly open from last year. Look at that red line. You can't. You don't get such precision with this, especially on dollar yen, quite to this degree on this level, and that's 109.68. So my point being, Pooja, I don't want to shift your focus if you have your risk parameters set. But just know that 10 pips lower is going to be a former swing high, 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 breach, acceleration, breakdown, acceleration, resistance, and here's the pivot. So I would just hate to see it get like stopped out and then a move higher. But just know that that level is something that we're watching. 109.53 loses efficacy, right? Because we've already kind of sailed through that one. But that's still the zone that if broken, I think you're in trouble on the dollar yen rally. That being said, it's just uptrend resistance, right? So weekly resistance coming into focus, uptrend resistance coming into focus. We're looking for reaction here. You got non-farm payrolls on tap. Dollar yen's definitely on the menu. Pooja says the dream, I know, but it's hard to imagine the abomination being so clean. A false break should be expected. In fact, we should wait for one before entering a position on yen and sterling too. I agree with the sterling. We'll go over that in a moment. I was very tempted yesterday. I would have squeezed out, reviewing the trade now, I would have squeezed out a decent position before taking a break-even stop on it. But yes, sterling's at risk here. It's really starting to test my patience. Any questions on dollar yen? Listen, a big reactor to US data. Again, tomorrow we're expecting a print of 163,000. Employment expected to hold 3.5. As far as Canada is concerned, well, I'll hit you when we hit the dollar CAD levels in a moment here. But typically a pretty strong reactor to US data. So watch this, watch these levels heading to tomorrow. All right, that is dollar yen. Let's jump into euro. So quite problematic on the euro as well. We're in a critical support zone. What do? Do you test it and just try to fight this drop, or do you look for the pivot lower and the repositioning to get back in? This is it. It's going to be all about this chart into the close of the week. Again, so many critical levels here as we close out the first week of February trade, guys. Last year's low week close, 109.76, been talking about that. 618 of the advance off last year's low, 110.16, been talking about that. We're right there right now. Caught the lows for the last, since November, since the October drop, has caught all the lows. Intraday and on a close basis. So real critical here. Real critical here. Let me clean this up a little bit. That's going to be null and void. That's your major focus right now for dollar yen, for euro dollar. Daily chart looks like this. Okay. This descending pitchfork is still sort of what we're focused on. Disappointing that this pivot didn't hold. It gave us a false break here on the first drop that we made into the start of February trade. Nice rebound. We just discounted it, chalked it up to a false break. Failure ahead of the upper parallel. Pivot back below. 110.16, 110.18. Favorite fib confluence. 618 off the low, 100% off the high. Here we are below it. Next big major downside target is going to be the same level we just looked at on the weekly chart. 109.76 into 109.81. That's going to be the 618 extension from back here. Not really like stressing that. It's the swing low. We literally tapped right off it. More importantly, that low we closed that we just talked about on the weekly chart, and that chalks up 109.76. So both of those converge on the median line heading into tomorrow. Looking for a reaction here. If you get the downside break, 109.56 is just a soft target. You're looking for 109.32. That's last year's low we close. That's basically this target if we break lower. All right, let me kind of clean that up. These are the major levels on the daily chart for the euro. Same levels we've been following. So on the intraday charts, if you're following the reports, this same level, just kind of clean that up a little bit. That's 786. But that's the next major downside support level for euro heading to tomorrow. So again, a scenario where if the dollar rips, comes in stronger than expected. Remember, we've been getting nothing but good news. So a lot of this is baked in the cake already. Add to that the employment, like I said, is not really the focus right now, labor markets for the Fed. All that being said, if the dollar were to rip higher, you get one last drive lower in euro, kind of 109.76, 109.82 failure. Look for possible turns there. It'd be really great if you got a strong divergence signal there too as well. Both reference points, well above 30 here. So if you were to maintain that kind of grade as you get a new low, be a decent signal. But this is the line in the sand. And we've been talking about that being broader bullish invalidation, guys, for some time. So if that breaks, all bets are off on the bulls. You're looking for a much deeper stretch there in euro. Intraday, here's what it looks like. So that near-term upslope gave out. There's the break. This chalked up for me to be a break of the weekly opening range. Here's the median line offering some support, right? This is just a pitchfork off the highs that we made back in December. I'll leave that 618 there because we're still technically in that range, okay? 110.16, 110.18, still the zone of resistance. 110.30 is going to be the opening range lows. That's 618. And, you know, that's sort of my line in the sand here as sort of the near-term signal for the shorts. If we were to get north of 110.30, at least I'd like to see at least a test of the upper parallel of this formation. Any questions here on euro? Make or break into 109.76. It's really quite problematic for euro if that level does not hold. Feel free to take a snapshot of that if you need it. Okay, dollar CAD. Tomorrow's fireworks day, or has the potential to be, with both of those employment reports hitting at the same time. Here's what dollar CAD looks like first on the weekly chart. We looked at this on Tuesday. Not really much to write home about here. As far as the weekly charts are concerned, you know, we're on the back of this is going to be the fifth consecutive weekly rally. We're into fresh highs, or well, fresh yearly highs, but we're into highs that we haven't seen since late last year, November and December. The close highs, obviously, from everything, you know, post June of last year. So nothing from a structural standpoint per se, but certainly you're heading to some major swing highs. I do want to note, excuse me, that it looks like this momentum trigger has given out. We'll look to see again if we get the confirmed close this week, but dollar CAD is just sort of relentless, right? And it's been exacerbated by the weakness that you've seen in crude prices. Now, we've been talking about crude prices. I put out a chart yesterday. We'll go over the crude levels for sure. That's coming in some major critical weekly support as well. So you can kind of, for the guys who are saying, oh, well, you know, dollar CAD's never is gonna settle until we get some sort of basing in crude. You know, crude's at support, dollar CAD, not so much at daily resistance, but we'll look at it in a moment. Here's what the daily chart looks like. This is the initial slope that we were looking at into the start of the month or into the close of January. Remember this zone right here? We tried to fade that, played a couple of rounds off it, got stopped out on the last two runs, ripped higher. You know, ideally, you'd get that stretch into 33.30, 33.35. But there's some near-term slope that we threw on that puts a gradient here. What I wanted to highlight is momentum, right, on a daily basis, butting right up into 70 here. You see this? And price, again, this is the close highs that you made for both the November. I mean, you don't have to take my word for it. Boom. For both the November and the December stretch. Okay. Now, if you look to the left on the crosshair there, look back in February of last year. Look back in March of last year. Look back in April of last year. Right, on a closed basis. Huge pivot zone. Bring it back into the line chart, into the candle. There it is. There it is. So you could see where, fine, we're finding some lateral levels of resistance, might not be as obvious, kind of hidden. All right, momentum at 70. All right, what does the near-term chart look like? Well, that same slope we've been following, that pitchfork, turned just ahead of the upper parallel. So here's what we've been following in dollar CAD. That's what it looked like on the 3rd. That ended up being the high so far on the week, just above the 33 handle, right? We came into this stretch, didn't quite make it to the upper parallel, and we've been sitting laterally ever since. Near-term support at the December open, 32.70, has just been, you kind of just bobbling right against it. So the levels are the same. Again, 32.31, which is the weekly open, converged on that slope, on both slopes, into the start of the week or on the third there, but kind of gets kicked out a little bit. So choke it up a little bit, 32.31, 32.47, that's 786. That is where they converge at this point. A break below this would have us targeting 3180, which is going to be the key zone of support. That's the pivot, 618 off the low, 100 off the high, beautiful confluence region on support. There's 33.30 into 33.35. So you can, again, one of those scenarios where if you get dollar strength, it takes you just closer to uptrend resistance, right? Similar to the DXY. So if that's the scenario, you want to be light on trying to play anything on the short side if you do get exhaustion up there. If you're holding longs, I know some of you are holding longs still in dollar CAD, do something up there. 33.30s, 33.40s. You want to tidy things up, reduce positioning size, bring up your stops to break even or better. I would definitely have a stop above 32.50 if it does break into that resistance zone, because if it washes out, it might wash out pretty quick. So there's no point in kind of leaving your stop too far down, in my opinion, on dollar CAD. But it's there. We're at lateral weekly and daily sort of pivots where you could find some resistance near term. 33.30s, 33.40s might be asking for too much there, but that's the next level of which I'd like to see, or at least tempt, a counter trend exhaustion trade. Any questions on dollar CAD? Expecting a print tomorrow about a 17.5 thousand. We got a revised read for last month's print of 27.3 thousand. Data has been pretty decent, but there's always that breakdown variable for the CAD data. So last month around, we saw part-time employment actually contract 3.2 thousand, but we saw full-time explode 38. So that breakdown of part to full is always something you want to kind of keep an eye out. Unemployment jumped from 5.6 to 5.7, but again, you did see an uptick in the participation rate in Canada as well. Much smaller sample size, so that change in the participation rate that we talk about in the US, it's even more apparent in an economy like Canada. So keep that in mind. 8:30 tomorrow morning, both those prints come out. Looking for dollar CAD exhaustion, your 33.40s, 33.30s, or if it just breaks down and he moves up 32.30, and you're looking for that bigger drop towards upslope support. Any questions on dollar CAD? That is number 4. All right, number 5. Pooja, here's sterling. So look, do you remember this pitchfork, guys? We threw this on together in the webinar, if I recall. It's do or die. It's like if this doesn't hold, finito. Here it is. This is the same chart, guys, that we published back on the 4th. It's kind of a gutsy call to even throw this pitchfork on there, but the severity, the timing, the way the reversal happened, if there's any potential for a bounce, that would have been it. You got a decent move. This fizzle out real quick. What do you do here? What do you do here? Now remember, let me take a step back. The low hasn't technically broken yet, so I'm just going to put that out there. But remember the critical zone of support. Here's sterling on the weekly chart. 129.21, 129. 129 is the low that he made in December on that last stretch. 129.21 is a basic 38.2 of last year's entire range. So the advance from last year's low to last year's high in sterling, a basic 38.2. So a decent pivot in price. Again, this key support barrier, if broken, would validate a break of that upslope, of that ascending channel, right? It's only a 2-point touch, but the parallel did offer some nice resistance. That's going to be sort of the line in the sand. So do we get that stretch into 29, or does it fizzle out first? It's a tough one here on sterling. It's a tough one on sterling. So you're holding a short, excuse me, on this one. If I'm not mistaken, Pooja, you were saying earlier, These are your two downside targets. My stops are 29.82. Okay, you got it pretty tight, right? Here's sterling on the daily chart. Let me show you this. Right? There's that same slope that we were looking at in the weekly. There's that 29.90 level. Do you guys remember 29.90? We've been talking about 29.90 for weeks, right? Since the start of the year, it's been our line in the sand as we were holding this near-term upslope on a closed basis. It held until this February 3rd, the open of this month, when things just completely collapsed, closed there, bobbled for a day. We still haven't closed below. Today would be the first. Watch the close. Here's the line chart. This is our first test of that slope on a closed basis. It's the first test of 29.90 on a closed basis to break. So yeah, this has implications for me, Pooja. If we close sub 29.90, it's another 70 pips before the upper bounds of that support range, another 90 pips before the lower ends of that support range. Also within that zone, just to sprinkle some love on that, you got the December open, you got the November open, there's just so much there. So yeah, it's pretty important how today closes in reference to 29.90. It could be just one more intraday drop, just like we got here. 1, 2, 3, 4, 5, 6, 7 days. We intraday dropped well below 29.90 and closed above. So my caution, I think, here is warranted, right? Here's again the intraday chart. There's that key zone, right? There's 29.90. Every drop hasn't really lasted long. If this is legit, that's your next zone. Anything sub 29.90, it's just like Euro, right? Sub 109.76, you're in trouble. You're in trouble. That said, the immediate short side bias is vulnerable into that zone. Pooja says, if my stop survives, maybe we are in for 100% extension off the January high. A big if. In sterling, I already looked at that. Yeah, could be. Could be. Well, the broader 100% extension, just for your information, is up here. A lot of different ways that you can look at this break if it does materialize below 29. You know, that's a big if, in my opinion, Pooja, is down there. But if you're looking for just the near-term slope off the January high, that's still just below 28.95. Every way you slice it, 29 comes up as a big region. All right, any questions on pound? It's do or die here. If it holds these lows and it pivots back above 29.90, every time it's done that, the long has worked at least for a decent 30 pip run off that mark. If don't chase a short break if it happens. If it breaks here, there's not much room. You're 20 pips off before you run into 29.20, and then 29 is going to be kind of your bigger zone of support there. All right, that is number 5, sterling. Number 6, here is Kiwi. New Zealand dollar, just waiting for the move. So here's what Kiwi looked like yesterday. It's kind of working with this channel, hoping to see 64.68 hold, weekly open support. I was looking for some sort of pivot there, some sort of trigger there. Didn't happen last night. You got this spill in early European trade today. I hope no one got faked out on that. And here we are kind of just straddling it. Look, what I said last night is still the same thing. The slope looks, let me do this. Forget the slope now. This is going to be noise. Okay. It's a weekly opening range. Here's your weekly opening range low. Here's your weekly opening range high. Test it again. Here's the low, right? Look for the break. The bigger play here is whether or not you're going to make one last low for a drop into 64.14, 64.24, or a pivot above 65.20. That swing low, basic channel resistance, will put you back on the upside. So we're mid-range for all intents and purposes. I want to either see a drop into this zone and a larger recovery off that, or if we break through this, I'll buy pullbacks looking to play sort of the resumptive move. That's all I got to say on Kiwi. It's kind of a tough call at this point. Here's what it looks like on the intraday. Again, some basic parallels here in play, nothing really too fancy. 65.20 is going to be sort of near-term bearish inval. If we get through that, you're looking for the topside breach of this channel. Again, a break lower, 64.24, 64.15, that's 618 is going to be the level we're looking for support. A little bit of a different gradient that you're looking at here than you are on the daily chart, okay? Using the high that we made back here as opposed to here of this slope. So on the daily chart, you're looking at this, just to put things clearer. In fact, that kind of gives you a little bit tighter of a slice there. So for the sake of consistency, why don't we just work with that there? Does that answer your question? A little clearer? It's the same levels. It's the same levels. Kiwi 88.6 was 66.56. Low was 66.58. Go Puja. Yeah, the 88.6 hidden fib that a lot of people don't look for. Are you talking about just this near-term advance? You're getting real granular, Puja, aren't you? I want to see that. Yep. Yep. Clean, clean, clean. For all, again, use this as a weekly opening range and play it as such because no, it's a pretty well-defined range right below resistance. So hopefully we get a play in this soon. Any questions on Kiwi? Here's Kiwi. Here's Kiwi on the weekly chart. And the reason we were looking for that sort of ideal drop into 64.15, 64.36, 2018 low close, and the 2018 low sit right in this range above the 618 of last year's advance. Nice spot. Nice spot. If you're going to get a drop, nice spot. All right. But clear 5 up near term. How near term you talking, Puja? Five. Yeah, you could say that. Even if this was 3 and this was 5, corrective action. Could still take this lower though. As long as we hold these, play the weekly opening range on this, Puja. Listen, I want Kiwi to base. My humble opinion, I want Kiwi to base. Whether it drops into this key zone first, then rips, or whether this chalks up to being a false break scenario and we just resume, I don't know how it's going to materialize at the end of the day, but we have to trade what we see in near-term price. And as far as this is concerned, I'd still, with the event risk on tap and everything that's there, wouldn't put it past this thing to make that last drop, DXY to make that last push. Now, when you put this in comparison with Aussie, it actually looks pretty interesting. It actually looks pretty interesting. Here's what Aussie dollar looks like. We'll jump into that as number 7 on the recovery. Look, so Aussie on the weekly chart came right into the lows that you made last year. The low registered, I guess this was the actual considered low, 66.70. The low we made right here, 66.78, 8 pips off. And here we are pushing back up. So big resistance is still up here in Aussie, right? but this is the initial defense of basic support. So Kiwi hasn't really gotten that up thrust yet. We're still holding the weekly opening range there. I think you get some definitive price action tomorrow. Here's the Aussie chart. Just want to show you the same slope. Our last Aussie update was right here on the 2nd. Okay, same slope series. Pretty clean, pretty clean. Bearish invalidation was 67.06. That was a low day close. Here was parallel resistance, 66.70, right? Didn't quite make 66.70. This held into the open, popped through, boom, boom, support. You can still get that move towards 67.90s, just shy of 68 is the upper parallel of basic channel resistance. How to get, if equities go lower, it's hard to imagine Aussie and Kiwi making lows again. A very big if. So here's the thing with equities. Did anyone see yesterday's piece? I put this on Daily FX as well. Guys, this is the same slope we've been watching this whole time. Remember that level? 33.53. We're there. This is the 100% extension, guys, of the advance off the lows that we made. Late last 2018, right here. So 2018 low, opening range highs for 2019. Subsequent low we made right into the close of the first half of the year. 100% extension, 2 equal legs takes you into 33.53. The upper parallel of the same pitchfork we've been following, right? Lower parallel support, pivot on the median line. Here's just a parallel extended off that, sliding parallel, got your resistance, you pivoted back above it, break below it, saw acceleration. Here's the break above it, acceleration again. Here's the upper parallel for a third, fourth touch. Again, not going to call a high, not going to be one trying to sit here and tell everyone to sell stocks, but all I am saying is that look for a reaction here at 33.35. Listen, if this pivots higher, you should see an accelerated move. You don't want to see sort of a long, sort of a dribble higher. If this is going to break, you'd want to see an accelerated pop, or at least, a continuation of the acceleration we've already gotten, just like you got back here. If it's going to fail, you're already seeing those hallmarks of possible near-term divergence. Price action making a higher high, the oscillator making a much lower high. And in fact, all of those reference points being noted, here's the highs, here's the higher high in price, the lower high in the oscillator comes well below not only the trigger break, but also, remember what I always tell you, those signals, the closer the divergence signals are to 50, those subtleties actually tend to be the stronger ones. So, maybe this needs some sort of catalyst. Maybe the corona thing, God forbid, obviously the human toll, but maybe that gets worse in the sentiment and starts to hit. I don't know. I agree with you, Pooja. If markets really turn over hard, it'd be hard to see Aussie and Kiwi finding some sort of material base. But aside from this coming into resistance right now, there's not much really to say if equities go lower. If we've been taking that mentality for the last couple of years, you've probably not been doing so well, except for the outsized months that you got, I don't know, in like August of last year, or was that July? Point being, you're coming to uptrend resistance, right? We might do something like this for the next couple of weeks, right? Where we just capitulate, push, pull back, push, pull back. I don't know. This is a big slope. It's a big lateral level of resistance. Momentum is not quite where it was the last time we approached these levels. So definitely a concern, a cause for concern for anyone who's intraday or intra-week trading equities. This is a level you want to respect at 33.53 near term. Does that help? Does that make sense, guys? So what does that mean for crude? Um, the levels we've been watching there are pretty huge. And what we're defending today is actually a region that's absolutely paramount. 52, well, let me take this a step back. Here's the weekly chart. On a weekly basis, tomorrow into the close, what you want to focus on is whether we close above or below this key threshold. It's caught every single low in crude since January of last year. All right. So this would be the lowest close we've made since then. If we hold 50, 60, I'd be really precarious. If we're closed below it, man, there's some serious problems here in crude as well. Okay, so this is a big zone. Again, look at my crosshair to the left. You can see pivots there dating back to 2016, 2015. Just a big zone. This pitchfork, which held all the way to the breakout we saw in late 2017, median line support, got messy here, but on a closed basis, perfect median line support, right? Those are the targets you'd be looking for if this downside breaks. What was that? Was that a tag like here, like here? And do you find some basing along this parallel now? Or does it want to go for a deeper test of that red line, that parallel, which caught the low here on a closed basis? It's all going to be based on how we close in relation to this 50, 50, 60, 51, 60. This $1 range is absolutely critical. Okay, we had an outside weekly reversal off resistance with a trigger break, shifted our focus lower. The major two targets that we were looking for was first 54.54, second this zone right here. Watch the close. It's the weekly chart. Here's daily, even cleaner. Here's the pitchfork we've been following. Recall that we took a parallel off this last night. Oops, sorry about that. Here's what it looked like on last night's update on crude. Okay, basic parallel off the slope series extending from the November lows. One touch, two touch already gives you a two touch gradient. That basically pivoted off it this week. So what's the major key resistance zone? Was the key support zone? Was the median line 51.67 to 52.29 on the daily chart is what we've been highlighting. It's the low close, low day close they made back in August. So look at what we just did. Right into that zone, pull back. You also had this consolidation. Remember, we were looking at that. We got a false break to the upside, but you have a one touch, two touch, break, test his resistance and move off. Look, I wouldn't put it past this thing to still give us the drive into 48, but I'm all about this pivot. I'm all about this pivot. If we pivot back above this, again, this would be sort of the tell also for the dollar CAD trade, right? Again, I don't like to work too stick with the corollaries, but if it happens, further supports the notion. If this fails here for a last drive into that key zone to the downside, here's the intraday. It's simple. It's a weekly opening range right below the low day close, 52.29. Here it is, right? If we get that last drive, 48.14, find that support, that 1618 slope line, caught these last three lows right there. Nice area. We find some exhaustion if we do get it. If we pivot back above 52.29, you're, sorry, my Siri thought I said something, but it would be the continuation or the resumption for a larger correction in crude prices to the upside. And again, that would be fuel in the fire for at least a near-term pullback from upslope resistance in dollar CAD. No change to any of those levels on crude. Questions, comments, concerns on crude prices? All right. Gold, that was number 9. Here's gold number 10. And that's the last one I got on my list. Here's what bullion looks like heading into the close of the week. The levels have been super clean. Do you remember this setup, guys? Here's our last update on gold. Highlighting key support at 1547, 1546. Really big zone of resistance at 38.2, the bigger advance. 618 extension from the decline off the highs. Really nice level converged right on the lower parallel to this pitchfork that we just added. Man, you couldn't have gotten a clearer signal, guys. A new low registered right into that critical three-way confluence zone on that last drop. You got a really nice divergence signal, price action with a lower low, the oscillator with a higher low, one reference point below 30, one above. Really nice opportunity to take the long position. This is the last level I would get too familiar with. So it's the 38.2 retracement of the drop. It's the median line. Just higher, your next upside target would be 1570, okay? But you're still at risk here, right? You're still at risk, so use some caution. Here's the reversal that we've made off of key resistance on the daily chart. Look at this slope. There's the median line. There's the median line. And again, another reason why sort of trying to play this rebound, I think was a prudent move. But from here, I don't want to get too fancy heading into non-farm payrolls tomorrow. So 1564 was sort of the line in the sand. If we get above that, like I said, 1570 is a level to watch. This former slope on the daily chart kind of comes into play as well. So some symmetry there on intraday and daily. But you know, basically 1570 is going to be my near-term bearish inval. Below that, I still think you're at risk for sort of that larger drawback after breaking upslope support, right? Remember gold on the weekly chart. If this pivot materializes a daily close back below this slope, I still think you risk a deeper pullback. I still think you risk a deeper pullback. Maybe that's just me again. We'll have to see how this week materializes, but there's divergent signals all over the place, guys, even on this weekly chart, right? Now, both signal reference points are above 70. It's a weak one, but it's there. So that's my take on gold. Even if you see some more upside tomorrow, 1570s, line in the sand, anything northbound of this, you know, 1586 has been our level and remains our level, guys. If we mount that again, you're looking for a resumption. This is kind of no man's land right here. I don't want to do anything in this zone. Questions on gold heading into the close of the week. All right, that's everything I have on the menu, guys. U.S. markets are about to come online. Best of luck trading. Things are going to get quiet heading into, you know, Asia today. You know, liquidity might start to thin out ahead of non-farm payrolls. Again, the print is expected to be pretty decent. We've been getting decent data on the employment and labor markets in general. So I think that's mostly baked in. Watch price action. Don't look at the headlines. Watch price action. Fed Kaplan is speaking at this point in Dallas, guys. So some commentary moving here. Watch that 98.40 level on DXY, and we'll see if this pans out. I hope everyone has an awesome weekend. Best of luck trading tomorrow, and I'll see you guys Monday morning on the free session on Daily Effects, and right back here on SB Tuesday and Thursday. Have an awesome weekend, guys. Cheers.